Hi guys, welcome back to the Financial Interest YouTube channel. My name's Dan. So in this week's video, I'm going to cover investing versus trading. So we're going to go over what the main differences are, because I know that quite a lot of people can get confused with this, especially in the recent light of GameStop and things like that, when people are actually wondering what the difference is between people who invest in stocks and actually just trade off them, and what that actually is. So if you're new to the channel, I cover personal finance, stock market investing and company analysis. Please feel free to subscribe to the channel if you aren't already to be notified of any future content I make. So let's get on with the video. So in both investing and trading, people are looking to make a profit from the financial markets, but that's actually probably where the similarities end. So let's go and cover now the differences between the two. So for investing, we're looking at a much longer time horizon. So probably a period of definitely years and decades when it comes to investing, compared to trading where we're looking at short-term time frames such as kind of minutes, hours, days, probably up to a period of weeks. So that's a kind of big difference in the actual time frame that we're looking at. So scalping is where you're looking to do a kind of high volume of transactions over a short time frame. And for this, you're looking to capitalize on very small moves in the price, but do kind of high frequency trades. So you might only be making a small amount each time, but you're looking to make a profit from doing like a high volume of those. And the next one would be day trading. So this is kind of the most well-known one. So this is when you're moving in and out of stocks within the same day. You never hold your positions overnight with day trading. So it's the same principle. You're looking to take advantage of very short-term moves in the price to kind of get into the market and out of it with a profit. And the next one would be swing trading. This is kind of over a period of longer than a day, so maybe a couple of days up to a couple of weeks at the most. So for swing trading, we want to get in as low as possible, take advantage of like the momentum shifting up. So we want to ride the momentum of the stock going up, and then as soon as we see the momentum dying out, then we want to close the trade and exit to make a profit there. So this is over a period of a couple of days up to a couple of weeks. And the next difference between investing and trading is the use of different forms of analysis. So in investing, we're using fundamental analysis, whereas in trading, we're looking at technical analysis. So I'll just read you the definition of fundamental analysis from Investopedia. So fundamental analysis is a method of measuring a security's intrinsic value by examining related economic and financial factors. Fundamental analysts study anything that can affect the security's value, from macroeconomic factors such as the state of the economy and industry conditions to microeconomic factors like the effectiveness of the company's management. So the end goal is to arrive at a number that an investor can compare with the security's current price in order to see whether the security is undervalued or overvalued. And representing fundamental analysis is Warren Buffett reading the paper. So this is kind of sets the theme of what fundamental analysis is. It's kind of a lot of reading work. So fundamental analysis involves reading the annual reports. So for this, we need to analyze the company's financial statements, the income statement, balance sheet, cash flow statement, and we're trying to establish if the company has a moat or a durable competitive advantage by looking at this. This is part of my individual stock analysis playlist. So I'll leave a link at the end of this video and also put one in the description as well. And then the second part of the fundamental analysis is we're listening to the earnings calls. So from this, we're trying to establish how is the company's management? Are they aligned with the shareholders? Are they good at allocating capital to grow the business? All of these studies are to kind of allow us to establish the intrinsic value of a company. We want to gather the information of the earnings, the cash flow and the debt. And what we need to do is project the future earnings and cash flow. And then we have to take that amount, work back in a discounted cash flow analysis to come to what we think the value of the company is today. And this is what's known as the intrinsic value. So once we've kind of figured out what we think the intrinsic value is, then we need to apply a margin of safety, which is usually around 50%, to make sure that if we're wrong, we still got like some give and allowance in there so we don't actually lose money. And if the stock is at our margin of safety price or below, then we can buy. So if not, we'll add it to our watch list and wait for an event to actually put the company on sale so we can kind of buy it at that discounted price. And then we monitor the company. So we've kind of already put in all the hard work. So we just need to keep an eye on what's going on, make sure nothing's changed with the management of the company, make sure we're still happy that everything's going as planned. We'll kind of on a yearly basis reevaluate the price just to make sure we're on track with that as well. And we're looking to hold the business for the long term here. And we'll only really sell off shares if it's become really overvalued or if something's fundamentally changed and we no longer believe the business can generate the returns that we're looking for. And now we'll go and take a look at technical analysis. So we can see here that we've got all of the technical analysis, the screens, the tools, the charts and graphs and things like that. So this is kind of what represents the more trader mentality or the day trader kind of look. And I'll also give you the definition from Investopedia for technical analysis. Technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activity, such as price movement and volume. Unlike fundamental analysis, which attempts to evaluate a security's value based on the business results, such as sales and earnings, technical analysis focuses on the study of price and volume. And the technical analysis tools are used to scrutinize the ways supply and demand for a security will affect changes in price, volume, and implied volatility. So technical analysis is often used to generate short-term trading signals from various charting tools, but can also help improve the evaluation of a security's strengths or weaknesses relative to the broader market or one of its sectors. And this information helps analysts improve their overall valuation estimate. So let's now look at technical analysis. And for technical analysis, we're not concerned by the intrinsic value of the company. We're not even concerned who the stock is because we're actually purely looking at price. And with this, we're looking at how previous price action and movements have affected stock prices before. And what we're trying to establish is trends or things that are causing difference in price movements. So for this, we use a combination of different charts and indicators to give us entry and exit signals for trades. There's literally thousands of different indicators out there these days, and every one of them does something slightly different. So for this, we need a solid risk management strategy to ensure we don't lose a large amount of our capital. I'm not going to cover indicators in this video, but I'll show a couple of examples of what you kind of expect to see from them. So here you can see some candlestick charts and other moving averages, and also volume and volatility indicators as well. So moving on to the next point, investing is focused on value, whereas trading is focused on price. Now, we just touched on that previously, but to kind of go into a bit more detail, in investing, we're looking to find the value of an underlying asset. We want to understand the intrinsic value of the company and what it can return to us in the future. The price of the stock only comes into play at the point where we're actually looking to buy it or sell it. We're really just concerned with the value of it. So we're looking to buy it within our margin of safety. And that's when we kind of need to align our margin of safety valuation and the price up. And the same if we're looking to sell it. If we think now that the stock has far exceeded what its intrinsic value is, and we don't think it can grow at the rates we want to, then that's the point we might consider selling part of the stock. And on the other hand, for trading, we're only concerned in the price movements. So we're actually looking to capitalize on volatility, which is kind of a lot of changes in the price in the market. So we want kind of a lot of volume going on in the market, which creates the volatility with people buying and selling, which is what we want to take advantage of as a trader. So in the next point, investing, we're looking to buy and hold, whereas trading, we're looking to buy and sell frequently. So we've mentioned before that a key part of the difference is the time horizons involved. So in investing, we're looking to buy and hold because in this case, compounding is our best friend. We want to kind of buy as early as possible and then hold for as long as possible to give the actual power of compounding time to take its effect. Whereas in trading, we're looking to buy and sell as frequently as possible to kind of generate profits on each trade we're making. And finally, one of the most important differences between investing and trading is the risk. So investing is considered a lot lower risk than trading is. And one of the main reasons for that is due to leverage. And leverage is basically borrowed money that allows you to amplify your gains. So you're kind of leveraged, or you're borrowing money to trade a stock, because what you can do with that is you can kind of amplify your gains with the extra money that you've got. But this also, obviously on the flip side, amplifies your risks. So you're kind of putting a lot more capital at risk as well. And this might actually be money which you don't even have in your account. And the leverage idea comes from physics, where you use levers. So obviously in this case, you're using a lever to kind of put a small input force but generate a larger output force. And that's the kind of idea behind financial leverage. With trading, you'll need to have quite a large amount of capital at work to kind of make your returns. So you might be talking about, maybe you'll be trading with $10,000 to make like $100 return. So that's one of the things you need to be careful of as well. You need to use like a high amount of capital to generate those returns. And this is where your risk management strategy comes in as well. You need to kind of have a really solid risk management strategy to put into place as soon as any of the trades are going against you. So you're cutting your losses before it gets to the point where you're losing more than you have to lose. So personally, I do like the investing and the trading approach, but you have to kind of have two very different mindsets for that to work. You kind of need to kind of partition yourself, so you have your kind of investing head on one side and then your trading head on the other side. And I think it's important to have a solid footing in both fundamental and technical analysis, because there's always a kind of crossover in both areas where it's good to understand both of these different elements. But I would say long-term investing is probably more suitable to most people. You have to be very good and like a certain type of person to be very effective with trading. And I'm not sure everyone has the kind of the mentality and the skills to do that. And very few people are actually making a full-time living from trading as well. So that's one thing to consider. You'll see like all these people saying, I'm making this much, but these are very small amounts of people, probably like 1% of the people are actually trading. But let me know in the comments what you think about this. Do you have to be a certain type of person to trade? Like, do you prefer trading or do you prefer long-term investing? Let me know in the comments below. So thanks for watching the video. I hope you enjoyed it. If you did, please hit like. Also consider subscribing to the channel if you haven't already, so you can get notifications of when I release new material. So thanks for watching, and I'll see you in the next video. Cheers.